It's Brian Preston, the Money Guy.
All right, this next question, Brian, this is from Zachary. Zachary said, I just got my first adult job. He must have, you know what, I bet did he listen to that show that y'all did while I was out? Was that what it was about?
Maybe so.
All right, just got my first adult job. I have $40,000 in student loans. Should I prioritize paying my loans or maxing out my Roth IRA for 2021? We can't give a specific advice or no circumstance, but for a young person, how do they go about it, especially when they just got their first job? You know, I got out of college, I got these student loans, but man, I want to get my dollars working for me, and I hear about this $1 turns into 88.
Yep.
How do I know how to attack student loans versus wealth building, specifically when it's building inside a Roth?
I mean, I feel like I hold this thing up at least 4 or 5 times. We have created a system. If you just go to moneyguy.com/resources, the financial order of operations, we also have, if you go to learn.moneyguy.com, you can buy the course. It is one of those things where we really have tried to take the guesswork out of this on what to do with your next dollar. Look, if this is a federally subsidized student loan right now, the interest rate on that is 0 because the government's essentially paying the interest rates, all the interest on your student loan right now. So if I was looking at the financial order of operations, it can't be high interest, the student loan, because it's 0.
That's right.
That looks more like step number 9, which is low interest debt. So, and you can see on step 5, we have Roth and HSAs. That's going to lend itself to, hey, you're probably, while interest rates are on 0 on those federally subsidized student loans, you might want to consider funding the Roth IRA and doing other things. And plus, we just don't know with student loans what happens with, if they forgive the first $10,000.
Sure.
There's a lot of things that are in flux right now with student loans and education that you just need to pay attention to. But the financial order of operations is so dynamic that it actually builds that into the plan. So use the resources we're giving, because I think it could be very valuable with Zachary as you're trying to figure out how you navigate what to do with your next dollar.
And just a quick little rule of thumb. Right now, obviously, there's unique things going on with federal programs right now. But we've done an immense amount of research on looking at the equity risk premium, like historically, how does $1 turn into 88 and how does that change over time? And so we kind of gave you some loose guidelines that if you do have student loans and you're in your 20s and they're above 6%, yeah, maybe it makes sense to attack those. But if they're below 6%, there's a really good chance that your dollars can work harder for you if you put them to work. Once you get to your 30s, that number drops to 5%. Once you get to your 40s, that number drops to 4%. And by the time you're in your 50s, we'd like for you to be completely debt-free from student loans, because you're probably thinking about paying for college for junior at that point, hopefully.